Well, JP Morgan has hosted the management of Paytm for its conference with the likes of Mr. Vijay Shekhar Sharma, who is the CEO and founder, Mr. Madhur Deora, who is the CFO, and Mr. Bhavesh Gupta, who participated, all three participated in this conference. And the key takeaway is that JP Morgan believes is important from this conference is that Paytm expects to narrow down on its adjusted EBITDA losses, and that will happen progressively quarter on quarter, month on month. Now, when we look at how Q3 was with regard to EBITDA before ESOP cost stood just below that 400 crore mark versus just below the 500 crore mark a year earlier, so in Q3 of FY21. So what we are seeing is there is marked reduction in that EBITDA. Of course, ESOP cost was the major expense in Q3 of FY22, due to which the losses, bottom line losses, expanded for the company. However, broadly, the company is going to progressively see those losses come down, and that's going to be driven by higher contribution margins and improved operating leverage. Now, contribution margins have good tailwind on both sides of the business, payments as well as financial services, and it's going to be driven by growth even in MDR bearing instruments as well as in lending. Loan growth has been strong for Paytm. We did see that in the Jan 22 numbers as well, and the monthly transacting users have been improving, and that's a big positive for the company. MTU in fact was at around 6.5 crore at the end of Q3 of FY22, and that is a 37% growth. It was below 5 CR in the year ago period, coming in at almost 6.5 CR in Q3 of FY22, and after that as well, that's sustained. So in January of 2022, that saw the highest growth in average monthly transacting users, which came in just below the 7 crore mark. So strong growth seen on that front. Even GMV to MTU has been strong, and that is indicative that the engagement on the platform continues to remain strong. Definitely a good indicator for Paytm going forward. In fact, the last bit of push that JP Morgan believes that the stock will get is that there is a reduction in incremental investments from other payment market leaders, and that signals some amount of rationalization in the payments business as well as the competitive intensity in the business, which should definitely aid Paytm as well as its margins going forward. So JP Morgan is overweight on the stock. Mind you, the stock is down 64% from its IPO price, 60% from its 52-week high after listing at broadly 1950 rupees a share. So it's down to around 770 rupees as of yesterday. It was down over 5.5% yesterday as well. So JP Morgan giving it a target price of 1350 rupees a share. That's a 74% upside, an opportunity for investors to virtually cash in on all of the losses that they've made on the stock. However, JP Morgan's 1350 stock price has come in slightly earlier as well, and after that the stock has plummeted as well. So over the last couple of months it's down almost 30%. So we'll wait and watch how this plays out and how markets respond to it, but at the moment JP Morgan quite bullish on Paytm.